If you're not familiar with that, just Google London Gold Pool and read how hard the banks tried to maintain a fixed price for gold and used all their clout and a lot of gold and a lot of propaganda and everything that they could to manipulate the price and keep it at a certain level, and it failed. So I do believe that we will see it. Now, how long will it stay there? What the authorities will try to do about it? You have to remember that the free market is the free market. As long as I'm doing a transaction, I'm not harming anyone, and we look at natural law, that is a natural force that we have as beings, sentient beings, to be able to conduct on a higher law basis. Now, some entity might come up with that's illegal by a piece of paper, but from a higher perspective, it isn't. And this is what happens. I mean, Bastiat, that wrote The Law, the book called The Law, if you haven't read it, it's a quick read, but it just shows that this is not something new. This happens again and again and again, where these greedy SOBs pass laws to control the population, to line their pockets and make things that are basically not natural, not under natural law, but there's man's law to bend the rules to their benefit at the expense of everyone else. And this is a repeat performance. We're seeing it again now.
Welcome back to Finance and Liberty and Reluctant Preppers. We have a returning guest known as the Silver Guru, David Morgan, founder of themorganreport.com. That's correct, right?
Correct.
David Morgan, founder of themorganreport.com, is here with us again. And today is Thursday, January 23rd, 2020. David, thanks for joining us.
Oh, Delegate, thanks for having me.
Whenever we have you on, we get inundated with questions from our viewers, so we wanted to get to those. But before we do, I just thought, since you and I were just talking about it, could we treat for a moment what is occurring to you as the signs of a kind of a financial world gone mad and things that make no sense that you're seeing right now, and then we'll talk about some specific viewers' questions, which no doubt we'll touch on some more of those same topics.
Well, the look of being facetious, where do I start? I mean, I think some of the keys for me anyway are Professor Skidmore with the 21 trillion that was handed out without money, people's knowledge. Of course, Catherine Austin Fitts was instrumental in bringing that to the public's attention. And then once the government caught on, they basically said it was couldn't be investigated, couldn't be talked about. It was basically national security.
Books closed, off limits, yeah.
Yeah, so, just half the national debt, basically. And then, of course, this repro thing, which goes on and on and on. But it's not QE. No. We'll have to think of another name, but it's not that. And then, of course, the national debt continues to increase. And the smarter, let's say, nation states, I don't know if I want to characterize it as smarter. There's fear in the market under these other counterparties, or even, China, Russia, some of the other sovereigns are looking to remove themselves as much as possible from a U.S. dollar debt instrument, meaning, the long bond primarily, but anything if the U.S. Treasury behind it. They have them, but they're lightening their load, so to speak. So we're in this place where we've really never been before. I mean, all fiats have failed, but we've never had it globally. We've never had it where it was basically so pervasive that affected nearly everyone on the planet. Sure, there's exceptions. I mean, if you live out in the, in the outback as a tribal member, you're probably not going to have much to worry about as far as a change in lifestyle. But if you're in any way associated with the monetary system, what's going to take place within the next few years, I do believe my timing has been off, as many others have, but I don't think we could go much longer, meaning I think 2022, 2023 is pretty much the end of the road. Not that everything falls off a cliff. That's not how financial collapses happen. It's not like a collapse like in a card game where everything happens all at once. We've been seeing signs of it for years. I mean, if you just do a simple search on a Bing or any main search engine and say, how many bankruptcies occurred during the 2007-2008 financial crisis, and start reading, you'll see some very major corps that went down have never resurfaced. So, these things do not really they're not instantaneous. And all the retail stores that have closed, some of these are very well-known names. I mean, look at Sears. I mean, I just go on and on. You kind of hit a trigger point. But I think it's important to realize that, the Reluctant Preppers, I mean, your site and your show, I mean, a lot of people are reluctant to say, well, it looks okay with me. I've still got my job. My wife's still working, we're meeting all our payments. We have some savings. Everything looks pretty good over here. And on an individual case-by-case basis, that may be true for many people. But on a big picture perspective, things have been deteriorating for a very long time. I will say I'm not a huge Trump fan. Believe me, I try to be apolitical. It looks like there has been some benefit to the, let's say, lower-priced wage earners in this country. And that could be true. I don't really pay much attention to the official statistics as being valid. Yep. But perhaps they are, and I hope that they are. But to me, it's a little bit of the old adage, a little bit too little, too late.
Yeah. Well, you mentioned record number of store closings, and we have had just in the last. You're right. It's year after year after year. There's been this growing disconnect between the physical economy that's truly been struggling, and it's getting worse and worse. Record numbers of retail store closures. And we just interviewed a fellow who is highly connected within the trucking industry about what they're seeing in the transportation, where they move goods around, and what's very indicative of the activity in the physical economy. He said the number of trucking companies that has gone out of business in the past year is double what went out of business in the great financial collapse 2008, 2009 already. So as the officials are touting the best economy ever, we're seeing just example after example after example of where the true economy is just seriously stumbling, and yet the market indices march ever higher. So that gap is like a stretched rubber band between sort of like propaganda versus reality, and a lot of people are concerned that when that snaps, we're going to see something rather, seemingly abrupt happen, but for those who've had their eyes open, it's been right in front of us all along.
Right. I don't want to mischaracterize what I said earlier, about it takes time, as you just indicated, but, I think it was Jesse Livermore, how did you go broke was the question. He said, well, very slowly, then all of a sudden. That isn't so funny, because what happens as things as they are collapsing, they do tend to accelerate near the end.
Right.
I mean, for an example, I'm not predicting this, I'm not forecasting this, I'm just doing it as a thought experiment. But if there was a bank holiday on some Monday, everything was fine on Friday, and then Monday, there was a national alert that all banks are closed due to cyber attack on Wall Street. Or an example, again, I'm not forecasting this. That's all of a sudden, so things have been deteriorating, and all of a sudden it's like, wait a minute, it's affect the whole banking industry for a day or two, whatever. So I, again, just want you to be prepared. I don't think you have to be so focused on it that it, disturbs you, but I think to ignore it is even worse. So I think you just have to take an adult, balanced approach, realize it's a possibility, and as we move forward in time, in my studied view, it's more of a possibility. But it doesn't mean the end of everything, and it doesn't mean you can't get through it, come out the other side. In fact, in the Depression, there were not lots and lots, but there were several businesses that started during the Depression that thrived. I mean, if you have some ingenuity and meet a need that people have, or even a want. I mean, entertainment was huge in the Depression because people were depressed, and they were looking for an escape, which means that any entertainment value that helped them to kind of forget their present circumstances was something that made money for people. So there's always opportunity, even when the dark is dark and the light is light and everything in between.
One of the things that you didn't mention about things that are unusual that are happening right now is the whole advent of cryptocurrencies. And we were talking with Rob Kirby, and he mentioned this announcement on Tuesday and Wednesday of this week by a whole conglomerate of central banks, including the European Central Bank and the Bank for International Settlements. We have a question here from Darren Gander. What are your thoughts on the proposed central bank digital currency? Isn't all the world's currencies already mostly in digital form anyways? And is this just a ploy to justify total market manipulation on a global scale in a more efficient way?
Yeah, there's a lot there and a lot to read into, and I'll do my best. You may want to, contact me directly, which I'm hard to do, but you can go through the main office on our support channel. But number one, yes, everything's pretty much digital already. I mean, I made a joke about the one world currency years and years and years ago. It was when, gold and silver were probably the two best investments you could have. And that was, year over year for quite some time, actually. And I think, in Hong Kong. I'd been all through Europe. I spent about a week and a half, and I'd moved on to Asia. And I was on stage, of course, and I held up my Visa card, and I said, I don't need to worry about any currency. I've just used this everywhere I've been, which was, the UK, France, Spain, Italy, Germany, Switzerland, and now Hong Kong. And, the banks took care of all of the exchange rate problems that I have. I would say problems, all of the currency exchange rates. They took care of it automatically. All I had was this piece of plastic, was a global currency, basically. I had no need to worry about anything else. I didn't have to have their pieces of paper in a specific area to transact just about any type of thing I needed to do. But coming back further on the questions, I forecast in my early writing on my 2 bits about Bitcoin that if this idea caught on, watch, government hates any disturbance to their monopoly, they'll jump on board it. And as far as manipulation is concerned, my take is that it's already done. I mean, I gave a lecture, and my friend Mike Maloney was in the audience a few years ago at the conference I just came back from, the VRIC, the Vancouver Resource Investment Conference. And at that keynote, I started my whole speech on manipulation. I said, it's very simple. I mean, if you can manipulate interest rates, you manipulate basically the whole entire market, because everything, it comes off of an interest rate. An interest rate determines what the net present value is. I'm not trying to talk like a finance major, although I am. The point is, everything comes off of the interest rates. And if the market doesn't determine what the risk of a loan is, and government edicts it should be such and such, and that's the way it's going to be, everything stems from that. Mortgages, cost of doing business, cost of goods sold, inventory, warehousing, all this stuff depends on what the true cost of money is. And if the cost of money is distorted in any way, you don't have a free market. Therefore, everything from that onward is manipulated, and that was my point. And Mike picked up on it and said something similar, in the lecture that he did later on. And it's not, I thought of it or anything like that. I'm just trying to point out, for the answer to the question, as far as I'm concerned, things have been manipulated from the top down for a very, very long time.
Okay. We have 2 related questions from 2 different asks, but they're on the same wavelength here. Donald Orfeld Jr. and Johnny Dingo are both asking about the gold-silver ratio. We've talked with you about it in the past. Donald asks, if your goal was to accumulate more gold ounces, at what point would you exchange your silver for gold? At what point in the silver to gold ratio would you do that? And at what point would you start buying silver again?
Yeah, great questions. My crystal ball is not that polished up, but right now, first of all, that would be a call I would make real time. And I'm not saying, you got to subscribe to the Morning Report to get information. I'm not saying that. In fact, a lot of this stuff like that's, well questioned by the general public, I usually, if I give it to my membership first, I shortly thereafter, meaning within a couple days or so, usually make it public. But I would say right now, based on what happened already, 35-1 is what we saw. So rather than wait out for 30-1 or even 35-1, maybe at 40-1, so about half where we are now, which means it's outperformed gold, better than 2-1, twice as good. That would be one. Where would I buy back? As I see the chart right now, it's in my head. I don't need to look. I'd say anything around 70 or higher is probably good to buy back. We just don't know the future. I mean, if things happen to unravel the whole confidence and trust in the system, and people actually do need to back a crypto with a precious metal or do face-to-face transaction with hard metal, which I wouldn't rule out. I'm not really predicting that, and the further time goes on and everyone's kind of, forced into a digital-only type of a system, it's less and less likely that would take place, but you can't eliminate it. So we'll have to wait and see, but hopefully I hit that properly. Again, I would make those calls. And the other point I guess I have to make, Most amateurs want the exact top and the exact bottom. Well, at 88.8, I'll start buying silver again. And at 33.62, I'll swap my silver into gold, And no one can do that. I mean, I have caught an exact bottom and top a couple times in my life, and I've been at this 40 years, and they weren't planned. But if a pro looks to get in within 20% of the bottom, and a pro looks to get out within 20% of the top. So kind of bear that in mind. Set your own parameters. Within this bandwidth, I would swap, silver to gold, and within this bandwidth, I would go the other way. That's a good approach.
Another question, since you mentioned going to the metals research conference, 495 says, I am a physical guy. I buy metals for long game insurance factor. I have never, quote, invested in any financial market, and I'm pretty nearly completely out of the system. However, while attending the Silver and Gold Summit in San Francisco last year, I heard a few intriguing talks relating to the high potential gains by the metals royalty companies, some believing that these were by far the best metal investments. Your thoughts on royalty companies?
Physical metals first, and once that's accomplished, you get a lot of leverage safely, or safe as you can through the equities. I'm not going to tell you any of the names, but in this list, these are the 7 stocks I had last year. These are the gains we made January to January. 58%, 73%, 100%, 60%, 43% are real dog. 58% and 50%. Those average 63% gain. And 1, 2, 3 of those 7 are royalty companies. Excuse me. So the highest gainer was a silver company. It's not a royalty company. And the second best gainer was a miner, not a royalty company. Huh. But the royalty companies are probably the safest and most lucrative as a subset of the resource sector. So nothing against it. We kind of specialized in that and made money year over year. That one subset of the resource sector basically makes money regardless of the movement of silver or gold up or down. And a lot of people don't understand the dynamics of being basically a financing company. And, you get the gold that you have per contract, regardless of whether the miner that mined it and owes it to you mined it at a profit or a loss. You still get your gold or your silver, or you can do a copper stream, or you can do a cobalt stream for that matter. But most of these are either gold or silver stream.
Okay. Sean Heim asks, how do you see gold and silver actually being traded once it's in its bull run? For example, silver for cash, silver for other commodities, silver for real estate, and who will facilitate the trade for the precious metals? Banks, peer-to-peer, or some other way?
Yeah, I'd say all of the above. I'm not sure about the banks, but I have a friend in Las Vegas. He's no longer there. He basically built his house on silver. And think of all the different types of contractors he had, somebody to pour the foundation, and, carpenters, finish carpenters, roofers, all kinds of stuff. And he was able to just negotiate in almost all cases for the contractor or subcontractors to take payment in silver. So that's peer-to-peer, and that's, across the board in the construction industry. A lot of it, I think, will be digital. I mean, I've been a proponent of the precious metals and now crypto. So it's both. It's precious metals and crypto-backed debit card from a friend here in my local town here. That's a good way to facilitate, metals transactions, and it's transparent to the bank. So if I walk into what store do I use and not favor anybody, XYZ Market, it's a grocery store, and lay my silver-backed debit card. It could be gold, could be platinum, it could be any precious metal backing that card, whatever I have in my account, and it's debited out. And even though they chip away a little bit of my silver for the purchase, the merchant's not any wiser whatsoever at all, because he doesn't know anything that goes on in the back office. All they know is that it was a debit card, it was debited in dollars, and everything's good. So that's another way. There's a whole section that is on my website, which you don't have to pay to get. It's out there in the general public domain, written by one of the best constitutional scholars, Dr. Edwin Vieira, and I forget the exact title, but it's doing business in gold and silver only. So it's a very long, it's not a pamphlet, it's not a book, but it's somewhere in between. And he shows you the legal ways to accomplish just about anything using gold and silver in the transactions. I mean, the bottom line is this, believe it or not, and I'm laughing, you are free to still negotiate a contractual basis as long as it's legal and you're not doing anything illicit in the United States of America, which means that I can build a house with silver, I can pay for tax with silver if the cab person is willing to do it. That'd be more like the private ownership, like an Uber type of thing, not so much, a corporate structure where the people are just baffled by seeing actual money and, used as a transaction. But my point is, we are really the more responsible parties to make it happen again. But there'll be all kinds of ways, especially as it becomes more and more popular. But I think the main way it'll take place, believe it or not, and I'm not saying this is good or bad, I'll try to remain neutral, will be digitally, like I just outlined with the silver gold-backed debit card and silver and gold-backed cryptos. I think that's probably the direction that we're actually going.
Lawful Money asks, Mr. Morgan, do you think we will ever see a time when precious metals are no longer manipulated and real pricing is allowed to return to these markets?
Well, I don't think it would be allowed, but I think it will happen. And I'm not trying to be cute with my answer, but yes, I do. History shows that almost all manipulations eventually come to an end. I mean, one of the best in the metals, of course, is the London Gold Pool. If you're not familiar with that, just Google London Gold Pool and read how hard the banks tried to maintain a fixed price for gold and used all their clout and a lot of gold and a lot of propaganda and everything that they could to manipulate the price and keep it at a certain level, and it failed. So I do believe that we will see it. Now, how long will it stay there? What the authorities will try to do about it? You have to remember that the free market is the free market. As long as I'm doing a transaction, I'm not harming anyone, and we look at natural law, that is a natural force that we have as beings, sentient beings, to be able to conduct on a higher law basis. Now, some entity might come up with that's illegal by a piece of paper, but from a higher perspective, it isn't. And this is what happens. I mean, Bastiat, that wrote The Law, the book called The Law, if you haven't read it, it's a quick read, but it just shows that this is not something new. This happens again and again and again, where these greedy SOBs pass laws to control the population, to line their pockets and make things that are basically not natural, not under natural law, but there's man's law to bend the rules to their benefit at the expense of everyone else. And this is a repeat performance. We're seeing it again now. And, I just won't even go into it. There's so many, but I think you need to keep in mind, and I like this, and I don't have know to who attribute it to. I'm not sure. I haven't looked up in a long time, and maybe just making it up, and I don't mean to, but I think it is a valid quote, but a just man disobeys unjust laws. I mean, there's nothing to say. I'm not saying go break these man-made laws. I'm not saying that. What I'm saying is at some point, somewhere, someone has to stand up, like Martin Luther King did and like Gandhi did, where, you can break my body, but I'm not going to go against the will of God or against the natural law. The natural law says I'm a free sentient human being and I have these God-given rights, and I'm going to exhibit them right now in this courtroom. And if you're going to break my bones, then be for it. And you have people like that, and it's rare. It's easy to talk tough behind my computer screen. I'm not even saying I'm that strong to do it. I like to believe I am, but the point is, if we understood the law better and were more vigilant than we have been, we may not be in the situation that we are now in, but that doesn't mean all is lost. And it doesn't take a lot of people to stand up and resist what's wrong. Just because they pass a law doesn't mean make it right.
Speaking of standing up and doing what's right, I just wanted to interject here that for those who are getting value from this and other interviews that we do on this channel, and all the guests that we bring on, if it's adding insight to your life, if it's giving you the awareness that you need to be better prepared, that help us together share the mission by going to patreon.com/reluctantpreppers or paypal.me/reluctantpreppers to help support us so that we are not subject to arbitrary and capricious interferences with our ability to be here, which has on occasion come pretty close from YouTube and Google. So that's part of how we together, by banding together, there is strength in numbers, and together we are unstoppable. So David, we have another question from Mocha Trades, who, this was a little bit long, but I think it gets to an interesting point. I heard an interview where the interviewee said if a person can, instead of placing money in a bank, put money in a brokerage account, because they are transaction-only firms, they can't and don't lend money against anything like real estate. He mentioned his account with Ameritrade. He said they don't speculate, don't have derivatives, do not lend money against real estate. For we regular people who currently still have jobs with direct deposit into standard banks, one, are you familiar with the concept? Two, is it a valid consideration for the regular person? Three, do you think that they would also be impacted as banks would during a crisis? And four, do these types of firms handle typically direct deposits? So I can answer one of those questions because we had an account with TD Ameritrade, and after the 2008 collapse, actually no, it was after the 2000 .com collapse, we decided that we didn't want to be subject to precipitous collapses in the stock market. So we, at the recommendation of one of their financial advisors there, we moved all of our, or the majority of our funds into what was considered a money market equivalent account called the reserve fund. And you're supposed to get 1 day access to your funds, and I thought, okay, great. It wasn't guaranteed by the FDIC, but it was pretty good interest and supposed to be a money market. And then in the 2008 collapse, where Lehman Brothers went down, we got a notice from our Ameritrade brokerage firm saying, the funds you had, you don't have access to anymore in your reserve account. We said, what do you mean we don't have access to it? They said, well, it turns out that the reserve fund that was paying this nice, 2% interest or whatever it was actually investing on the backside in things that Lehman Brothers was managing for them. And because Lehman Brothers was collaterally damaged, your funds aren't accessible right now. And we never did get it all back. We got parts and little pieces over the months and over the years. And now when they call me annually to ask what they can do for me, I say, can you give me my money back? And then they want to change the subject. So I can at least say that if somebody told you that TD Ameritrade or any stockbroker is immune from that your funds that are held there in cash equivalent accounts are immune from market collapses or whatever, I've experienced otherwise. But I'll see if you have any other thing to add to that, David. I just had the personal experience to relate there.
Well, personal experience, empirical evidence is the best always. So certainly I'm not going to argue with the fact. In theory, I'll say that the FDIC insures your cash account up to $250,000, and the SPIC, Securities Insurance Protection Corp, is good for $500,000. So if you have a securities account, according to their rules, you are good for $500,000, $250 being in cash. So both are $250 cash equivalent. If your brokerage firm does leave, collapse, go out of business, you are purportedly, insured. But as you said, then again, don't bank on it. I think the best insurance, as I always have, is having metals in your own hand. How much do you need? That's for you to determine. I think 10% is pretty much a start. I think it could go up to 20. I think if you got all gold and silver, you may be a little extreme. But yeah, I don't take too much of this government or pseudo-government entities being able to come through. One thing I will say about the FDIC's $250,000 limit, it's my opinion, let me state it again, opinion, that if the next financial crisis gets to the level where there is a bail-in, because bail-outs are now illegal, but bail-ins are legal, I believe, and again, opinion is that they will only take funds above $250,000. So if you have $500,000 in your bank account and, the banks are going to fail, we had to bail in your account, you might see $250,000 disappear and now your account's at $250,000. Whereas if you had, for an example, $200,000 they had bail-ins, they might leave you alone. Again, that's conjecture on my part. I really don't know. What I do suggest is that you probably don't keep your cash balances very high unless you're absolutely required to. If you have a business and you've got a huge payroll or inventory payment or whatever, and you're required, to make payment and so and Federal Reserve notes, then obviously do it. But if you're an individual and have cash parked, I personally, and this really goes back to your point, Doug, again, and I'm not disagreeing with you, personally, I feel a little safer having cash in a brokerage account than I do in a bank. But as you said, they're not as safe as they say. They're as safe as they act, and you'll never know, how bad it could get. Just adding on a little more, during the financial crisis of 2008, that was the first time to my memory that your dollar was worth less than a dollar in a money market account. And that's a little bit scary. You think you have a cash account, and you do, but if you read the fine print and understand what they're really based on, usually short-term treasuries and other debt instruments that are short in duration, and it's almost as good as cash. But if you cashed out yet $1, you get your 98 cents or whatever it was. It was but of course we have negative yields now. At that time, there wasn't anything such as a negative yield in the bond market. Of course, that's been available to savvy investors now for some time. Guaranteed to take a loss on your cash.
Right. We have a question about silver specifically for our friend the Silver Guru. Peter Lukashis says, the silver market is so tiny on a global scale, so why would silver be so feared or heavily manipulated by the central banks?
Well, that's a tough one. I mean, I'm very opinionated on this, but I think that I'm going to do first of all, for everybody's edification, I am going to do a webinar, hopefully by the end of this month. It's January 2020, and we only have about a week and a half left. And I'm going to go through the silver gold ratio, and I'm going to make my argument, which you may agree with or you may disagree with, that when silver is money, it always traded at a level pretty near the natural ratio. And once silver was demonetized in the crime of 1873 is when you got these crazy ratios of, 100 to 1, 90 to 1, 81, 71, that type of thing. So back to the question again.
Just talking about if the silver market is so tiny, why would it get enough attention to be manipulated?
Yeah, I think it's because silver is so tiny that if it took off, the gold would have to follow it. If silver was used as a monetary asset, just like gold is, even though they don't talk about it, they kind of poo-poo it, gold's a pet rock, and it's just a barbarous relic, the banks still buy it hand over fist.
Yep.
And because of that being really the money of last resort by the banks, again, they won't say it, but that's how they act. So if silver was in that same position, if silver was treated like gold, the silver price would be far, far higher. So they're a little bit scared that they don't have control on the silver market like they do on the gold market. Do they have complete control of the gold market? No. But about half of the above ground world supply of gold is held by central banks. Whereas in silver, for all practical purposes, it's zero. So I think what they fear is that there is enough of a gathering of forces, be it a bunch of individuals, a sovereign wealth fund, a nation state. Mexico starts backing part of their money supply with silver. Who knows? That, I think, is a real fearful situation for them because they don't have much in the stockpile to throw at the market. Now, whether or not J.P. Morgan has this huge amount that some refer to, I'm not convinced. I can tell you what they have guaranteed because it's in the public domain, and you can look it up anytime you wish to see what they hold in official stores and what is unofficially held. I don't know. But so I hopefully answered that question. I think they're more worried about the possibility of losing the market on the silver side than almost anything else, although you'll never, ever hear them say that.
And the key takeaway I had from what you said, and tell me if I'm getting it, is that were the silver market to take off, that ordinary people using common logic, common sense, would associate that with gold, and gold would take off, and gold actually is heavily monetary metal that's owned by central banks and governments and that sort of thing, and would directly indicate loss of confidence in the fiat currencies and therefore their political structures, all that sort of thing.
Yeah, exactly. The last thing we want to see is the silver market to become uncapped and take off on its own and can't put the genie back in the bottle, which is really what was happening during 2011, late April, and I think the first or second trading day of May is when it was sold off. But remember, they raised margin requirements in the futures exchange, I think 4 times or maybe 5, I forget. It was like 4 or 5 before they're finally able to quell that market because it was really moving up in size. And so it's very normal for the authorities to increase the margin requirements to such a degree that it forces many of the small participants out of the market.
Right. Yeah, most people aren't aware of that mechanism to basically, put the screws to people who have been trying to trade in a rising market for precious metals. Is just without directly intervening in the purchasing, buying, or selling of the metals, they can just make an adjustment at any time on margin rules and trading rules, and that can cause people to be forced to liquidate their positions they otherwise would have wanted to hold on to.
Yeah, if I could just digress for a moment, I know we're going fairly long, but I had the palladium contracts on in the first big run-up in palladium way back years and years ago. I'm not talking about the present one. It was a previous one where I think palladium went, you can check the charts, I think 200 or 300 an ounce. I know it went to 1,100. I remember the top. And I had multiple contracts, and it was moving my direction. I was long. It was going up, up, up. And my broker called me and said, you have to put up more margin. I said, I think you are sadly mistaken. I'm long. And they said, no, yeah, well, yes, you are long. I think I was going to add to my position with all the equity I have in my account. No, you don't understand. They can up the margin requirements for both longs and shorts at the same time, which is exactly what they did, and they forced everybody out of the market. I won't say the number because it's a fairly large number, but I had to wire X amount of U.S. Federal Reserve notes to the broker within 3 days' time, or else I had to lose my positions. So I lost my positions at like 350 to watch that palladium market go all the way to 1,100. And if I had been able to hold those, I would have had like a $500,000 trade. But I don't want to whine. But this is what happens. I mean, why shouldn't I have the ability to have bought early and hold my account all the way up if I'm betting long and I'm right? But
right.
They forced me and everyone out of the market. And this is how bad it got. Look it up. You're not going to believe what I'm about to say. But at the top of the market, if you wanted a paper contract in palladium, I'm not talking today, I'm talking years ago when Ford Motor Company removed their gasoline catalytic converters from platinum to palladium. At the top of the market, you had to put up 2 times the cash price, 2 times the cash price to hold a paper contract. Did anyone hold it? No. But that's how much they increased the margin requirements. So it gets very bizarre. It's in their favor. It's a rigged game. I still do play it for lots of reasons, but the equity side is usually the safer side. The futures and options, even ETFs, can be a bit trying at times. The only reason I would have people think about a derivatives account is my experience in the last bull market, where you could not get the futures price or the spot price for silver very easily. In Los Angeles, on the day that we were at $50 an ounce, every dealer that was in the greater Los Angeles area had bid back to $35 an ounce. So you were taking a $15 haircut for every ounce you wanted to sell to a dealer. Now, you could maybe sell it on the street at 50, but if you had a derivatives account with a futures broker or whatever, you would be able to sell it on paper. And it's totally legal, and it's actually a way to hedge efficiently if you do what it's designed for, which means you have 1,000 ounces of silver, sell it on the paper markets, and sell 1,000 ounces. Don't sell 5,000 if you don't have it. But just a warning. Will it happen again this time? The answer is I really doubt it. It's a world market, a global market. We have the internet. Silver's in very strong hands, and it's much more ubiquitous in the markets versus the last time where it was the Hunt brothers, some Arab sheikhs, and a few people that understood money. This time it's much more diverse, so I don't think you're going to see these big bid backs like we saw in the 1980 high, but I do want to voice it because a lot of people are totally unaware of that fact.
If we could float one more question that's related to this, John Nordstrom asks, thank you for the opportunity to ask David questions. I am heavily invested in both physical precious metals and junior miners. Many metals gurus talk about when to get in, but few talk about when to take profits and get out. Can you give us your philosophy?
Well, I've called every top on the way up and everyone successfully. I'm not trying to pat myself on the back, and I certainly hope I get the next one, which I think will be the last one for quite some time. Time will tell. I could be wrong. So, we went from the break at a 555. We went up to like 758. I said that was a top. We came all the way back down and touched one trade probably at 555 and went back up. I got out at $21 on the way up, and then it went all the way down to 9 during the financial crisis, where I got in, and then watched it again and got in a leverage position at 19 and rode it all the way up to 48 and called that top. So I called the 850, the 21, and the $48 top successfully. My bottom calls haven't been as good, and I get criticized from some people, and that's fine. I mean, I called a bottom at 1817, and we're just over 18 now. And that 1817 bottom was an absolute correct call for 14 straight months. So, it looked good for over a year that I called the exact bottom, and then it went below that price. So it's tough to make any calls up or down. I'm pretty good. It's easier for me to call a top because of my connections, and I get to see what kind of email traffic I get. And, there's a lot of factors that go to me directly when the market's extremely hot. I know that, if the subscriber base goes up threefold in a 2-week time frame, I know we're probably getting pretty close to the top here. On the bottom, it's much more difficult because they're usually prolonged bottoms, and there's a lot of market intervention, let's say, that takes place on both sides, up and down. And markets can be manipulated up as well as down for various reasons. But anyway, back to you.
Well, we've been speaking with David Morgan, known as the Silver Guru, founder of the Morgan Report. David, if people go to your website, there's some free information. You mentioned that there's some research information that they can access. Any additional access to information they can have before they before they buy, so to speak?
Yeah, there's, just go to themorganreport.com, get our free email list. Every interview like this that I do, we'll send it out to you every weekend. I do a podcast called The Weekly Perspective every week that is an overview of the global economy, specifically, whether the economy is truly expanding or contracting. I usually wrap it up with a comment or two on the precious metals, at least gold, usually both. And then we'll give you access to the free webinars. Like I said, I'm going to be doing one on what if silver was treated the same as gold. It's a lecture I gave at the New Orleans Investment Conference, and I just finished giving it again at the Vancouver Resource Investment Conference. So I'm going to do it for the public. Again, I'll make the argument, what if silver was treated the same as gold, which means silver was used as a reserve asset in a monetary base, even though the bankers won't tell you that. Watch what they do, not what they say. What if silver is treated the same way? It's an interesting intellectual exercise, especially knowing the fact that the United States Constitution was founded on a silver standard, not on a gold standard.
Well, David, as always, appreciate your accommodating our request. Even though you just returned from travels, you've been very accommodating at working us into your schedule. And just thank you for joining us again here on Finance and Liberty and Reluctant Preppers.
Well, thanks for having me. I appreciate it always, and hopefully something I said will help someone out there in cyberspace to, for various reasons, intellectually, monetarily, philosophically, prepper-wise, or whatever. I am truly grateful for all that I have and the blessings that I have and my health and the fact that, I think the highest calling that anyone can have is know their purpose. And I feel it is my purpose and duty to do my best to explain a corrupt monetary system. And there's a lot of other corruption, as we know, but that's what I've focused on my entire life. And I just don't ever get tired of talking about it. So thank you.
I don't think there's anything I can add. Thank you, David. They say the stock market crashed today.
Yeah, I heard that.
Sounds like people's retirement accounts and savings accounts are going to get bailed into the banks.
Yeah.
Looks like pension plans and Social Security are going to get suspended too.
I know.
Sure, I'm glad we decided to put our money into gold and silver instead.
Me too.
Get your gold and silver and support this channel at goldsilver.com/AFF=RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.